You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Venazzi from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
All right, everybody. It's that time of the week. It is time for the Option Block, your bi-weekly source for all things options related. A little bit of options wit, a little bit of options wisdom, some fun, some analysis, some unusual activity, all sorts of good stuff that makes up the fun that is the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we hope so, Options Insider Radio Network. And as usual, I'm joined by a colorful cast of characters here on the old program. Let's start out around the horn. Where should we start? Let's see. Let's start off in the great state of Maine, where I am joined by the one, the only, the rock lobster himself, Mr. Andrew Giovinazzi from OptionPit.com by way of Carmen Line Capital. Mr. G, welcome back to the show, sir. How go things in the great state of Maine?
Busy this morning. Busy. Actually, the state of Maine, nothing's happening. It's sunny, so everybody's just kind of laying on rocks. But as far as, markets, lots of market stuff going on. A lot of market stuff going on here. So things are good. I'm just, it's a sunny day and summer's finally on its way. So we're ready.
Good stuff, sir. Also joining us from Parts Unknown, a.k.a. the Active Trader Strategy Desk over there at Fidelity, holding down the Fidelity hot seat today, Mr. Brian Isabel. Brian, welcome back to the show. To you, sir.
Thank you very much, sir. And hello, everybody. Good afternoon.
And last but not least, I think we got him. I think he's stopped rolling his puts for now. We have Uncle Mike Tussaw from RCM Wealth Advisors by way of St. Charles Wealth Management. Uncle Mike, welcome back to the show. To you as well, sir.
How are you? A lot of puts to roll these last few days, that's for sure.
Indeed. Lots of puts to roll, indeed, as we keep rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is indeed the portion of the show where we break down what the heck is trading, what the heck is going on in the wide world of options today. Let's kick things off. As we mentioned, it was looking pretty ugly coming in. Looks like the trade war premium is back. You know, we were all kind of sleeping on it. It all seemed like, yeah, you know, things are back in order. All is right with the world. No more trade war terror. No more trade war fear. And then, bam, we get a nice tweet over the weekend saying, you know, we're going to ratchet up those trade war tensions again. And once again, the vol is back. The trade war juice, the trade war premium is back and back with a vengeance. Excuse me. Coming into showtime. Actually, the markets seem to be recovering a little bit. They were all off well north of 1% earlier in the session. Now, it seems like saner, calmer, dare I say cooler heads are prevailing out there on the street. We've got the S&P off about 0.5%. The NASDAQ off a similar percentage, about a little more than 0.5%, and the Dow leading the charts to the downside off about 0.75%, but still all of them pretty much well off their lows of the session, which is, I'm sure, good news for all of the bulls out there in the audience. We saw our old friend, ye old VIX cash, popping quite a bit. It was at around 22 earlier in the session. Let's see, how high did we get intraday? 23.38 is the high intraday. And then we got 22, and then we were off, and then bam, right back off again, now down to 1963. So the poll we posted this morning looks like already perhaps getting a little long in the tooth there. We posed a VIX poll for you guys. And oh, how quickly the worm does turn out there in the volatility space, which is what makes it so fun to talk about. Let's get to it, though. Let's go back the opposite way around the horn. Let's go back to Uncle Mike first. Uncle Mike, sir, what is lighting up your personal tape in this day of maybe rolling puts, or maybe other stuff? A lot of things going on. What's lighting your tape up today, sir?
Well, I actually have not had, ironically, it actually kind of surprises me, I've actually not had to roll a single put. But I mean, I've sold some puts, but I mean, I've not had to roll any. So it's kind of surprising even myself with that one. But I think there's no doubt this is the trade, in my mind, that this is all with the trade war premium that we discussed, or that you had discussed a second ago. One thing that really I really love about what I do every day in terms of looking at markets is that I've been at this for over 15 years now, and every market movement I learn something new, or I get another lesson reinforced. And this time around is no different in that you really need to be nimble with markets. If you're not nimble, you're going to be in trouble. And with that being said, this is a market to where a couple days ago when we started coming down and the VIX went way higher when we went above the 20 level, I think we were even talking about on Monday even with Sebastian on the show. I didn't have any predictions for the market. And I mean, of course, I always think if it goes down, I think it's always a dip. And if it goes higher, then it's just going to be a continuation, continuing to go higher, of course. But need to manage risk around that, of course. But with that being said, one thing that I think was really important is that with a lot of the out-of-the-money calls that I was in, I got out of them when the VIX went above 20. And the reason is that when the market comes down, volatility comes up, I still had a chance to salvage a pretty decent chunk of what we had paid for those out-of-the-money calls. And so because of the VIX going higher. And what that did is it forced me to just take a look at what I was doing. And I'm thinking, okay, the VIX goes higher and we're okay for the time being. That's good. But if the market does come back higher and we rally, the VIX is not going to stay at that level. And that out-of-the-money call is not really going to benefit me all that much. If anything, it'll likely hurt me. So at that stage, I decided to go from being a premium buyer back to the other side of the fence, which is being a premium seller. I mean, I'm of the school of thought that there's no inherent advantage to being either a premium buyer or a premium seller. I think it needs to be based on your risks, goals, and objectives, of course, as well as your market sentiment, as well as your volatility sentiment. So now I'm at a stage to where I'm sitting on some pretty far out of the money put spreads at this point in time, to where I do have my lines in the sand in place to where if the market's going to continue to go down, I'll be out of them long before they go in the money, unless they have a super major gap, which is always possible. But I don't think we're going to have that. But if we do, hey, we're ready for it with the money management aspect of it. But my point is that in a market like right now, when you have things to where we have a pretty rapid shift from being a low vol market to a 20 plus VIX market, you need to be nimble in terms of how you're actually trading it. Of course, in terms of like what's lighting up my tape, I think just the market in general, this is a macro sell-off at this stage based upon what's going on with the trade wars. Some are going to be more than others, of course, but for the most part, the trade war, how will the negotiations go in Washington today and tomorrow? That's what everyone's looking at right now. I mean, there's other things that exist, but that's the big story. So that's what I'm looking at right now, and be nimble, folks. That's my message for today's trading block.
Yeah, things were looking pretty dire earlier in the session. People were actually quoting, easy for me to say, tweeting out where the circuit breakers were. That's how dire they were, in case you're wondering. 2678 is the down 7% circuit breaker out there in the S&P. Spoiler alert, don't think we're going to hit that today. But people were starting to panic a little bit, which is always interesting. Let's continue back around the horn the other way. Brian, what is going on in Fidelity land? I got to imagine this is the day where the phones are ringing off the hook. What are they calling up asking about, sir?
All over the place today, just like the market is. I like what Uncle Mike said there. I underlined it, wrote it down, nimble. This is that kind of a market. You really do need to be nimble in. It's whipsaws all over the place. All of that macro trade talk really can just turn that whole market on a dime, just like we saw over the past hour here. So really all over the place. And as soon as you start talking about something bearish, something bullish happens. And as soon as you start talking about something bullish, something bearish happens. So it's been quite an interesting week, really, but today in particular has been extremely interesting. One thing that I noted earlier today was that I know we talk a little bit about technical analysis when we come on, not a ton, but simple moving averages. We actually broke down through the 20 the other day, and we were sitting today right now even, pretty much sitting right on that 50-day simple moving average. So be interesting to see if it was going to provide support. It looks like it is now, but definitely going to keep an eye out on that. So for the most part, it's just been that macro news, watching out for trade war talk and tweets and interviews. As far as what we're also seeing from a trading perspective, ROKU had strong earnings, a lot of shares of ROKU being traded by Fidelity customers today. Disney earnings beat, but the revenues dropped from the movies, so that's been in the sights of Fidelity's traders, along with Stamps.com, STMP, down 55% on a bad earnings call.
Now, a lot of bad news for Stamps.com of late. It's not exactly been an uptrend for them of late.
Definitely one you want to be nimble in right there, for sure. Keep your head on a swivel if you're trading that. And then we also had quite a bit of activity in the chip makers throughout the day today. NVIDIA, Intel, AMD, obviously related to China trade talk. So those were the big things that we've been looking at over here at Fidelity.
So I'm looking here at Stamps.com. You're right, down 45 and a half handles, over almost 55% right now, right a little bit shy of the 38 level out there. This is the one we had talked about it a few months back. They got their wings clipped pretty aggressively. I mean, it's trading $37 now. It was trading $200 in February, 202. Then they had their wings clipped pretty aggressively. I remember they had their deal with the post office kind of got rejiggered a little bit, not favorably for them, obviously. That cut their wings pretty aggressively. Now, that seemed like it was going to be the worst of it. It got down from 202 down to 83 in a hurry in the span of a session. So that's going to leave a mark right there. But then it seems like things had kind of stabilized. They were down to hovering around those mid to low 80s for the better part of the last couple of months. Flirted with the 70 handle briefly, but pretty much they were in the 80s the entire time until last night, apparently, when the rest of the worm turned and it just came off hard. So they lost pretty much more than half of whatever existing value they had left. Not a good run for the last couple of months here from Stamps.com. 202 to 37 and change. That's going to leave a mark. I don't care what you have on out there. That's a rough one for Stamps.com. Let's keep on rolling, Mr. Rock Lobster, sir. It is the land of the return of volatility, so I'm guessing your newsletter is going hot and heavy today. What's going on? We're out of the land of the monk. We're well beyond that now. Where are we these days, sir?
You know what? We could not get into what is our freaky zone? The danger zone.
The danger
zone. We cannot
zone.
hold the danger zone.
Yeah, it was a brief flirtation with Kenny Loggins before we went back
like
down.
a half a tick. I think you know what we need, Mark, is you need music for each zone. So you just have that clip queued up right when it's ready to go.
I'm sure Kenny would be very, very nice with the licensing rights on that for letting us use it for his our VIX show. He's like, oh, volatility show, sure.
$1,000 a hit.
$10 million a piece. Why not? Let's go for it. He needs a new car.
We got close. So of course, the reason why I have these zones is so people can understand how to trade volatility. And every time you move from one quartile to the next, it's usually another level of market sentiment. And we went from kind of, like you said, the monk zone to the, kind of getting busy zone to the, let's call it the freaky zone, but not quite to the danger zone. So the market, at least traders have not gotten to that level for vol yet, where they're basically everybody's throwing their hands up and things are just all falling apart. So it has not gotten there yet. But it got close. It got about, 64 basis points away for VIX or something like that, 64 cents away. So strategy-wise, vol newsletter for me, I'm just rolling stuff up. I'm taking profits in long call spreads and VIX and moving more out of the money. And also, as you get farther into this area for VIX, the futures are hovering lower into, I think the high tick on the future today was, I'm going to say 20 half or 21 maybe for the May future. I got to see. It got up there. When VIX was 23, there's about $2 of backwardation or $3 of backwardation in it. So, and right now in cash is 1946 and the future's 18.5. So, trading VIX, the whole underlying is actually more around 18.5. So, call spreads, if we kind of get this still continued seesaw action, what happens is the futures kind of drift up to the cash eventually by expiration. That's just what has to happen. So there's a lot of interesting opportunities, I would say, in there for VIX. But like with most volatility strategies, you never know, as my grandmother would say, you never know how long it's going to last. It could be this week, depending on the tweet. It could maybe, the Chinese throw the gauntlet down, and then it's 2 more weeks, 3 more weeks. And then we have this up, down, 2% algo-driven just smash fest in the SPX. And then we could see, 19, 20, 21, 22, whatever for a while. So I like, you can't discount the fact that vol could stay here for a while because, as you guys said, it's kind of all macro-driven. It's not like the economy was doing bad. It seems to have kind of run through, like there was tariffs in the first quarter or whatever. It just didn't matter because there was growth and everything else. So I look at this and I go, well, I think it's just keep into whatever your discipline is. For me, that is just taking dollars on my long vol stuff that I own and seeing where it leads. Don't know exactly where it'll go, but we did not hold the danger zone. So I'm just saying that's maybe a mini tell for us that, we could have elevated vol, but it won't just go totally off the hook as we'll just call it, we don't have the massive buying opportunity yet. I mean, we're only down 50 points from the all-time high in SPX, just maybe a little more than that now. I'm just looking right now. So 293 SPY, we're trading 286. So that's only 7 SPY handles. That's not very much, or 8 SPY handles from the all-time high. So it's just, it's a mini sell-off.
Mini sell-off.
Not a danger zone sell-off.
Did you want to regale our audience really quickly with the strangle that you're working out there in the vol space right now?
Yes, it's a mixed bag strangle, of course, where because VIX is very bouncy in the short term, I like owning the short-term VIX. So that would be a trade like a 20, 30 call spread. They're trading for like $1.25. And then over that, you buy like longer-term VXX puts. So junkie puts like the 29s or 28s, something like that. And you kind of have that strangle going because If vol goes up, it will go up sharply short term in this cycle, and the May call spreads are really bouncy. Meaning, if we get that spike, your call spreads can make you quite a bit of money quickly. And then you have your VXX puts for credit, and you wait for the trade war to subside, and hopefully you get to sell those for something. So that is the nature of that strangle. It's the kind of all-letter newsletter trade stuff we do when things are crazy like this. I guess what we'll say, zone 3 crazy, not danger zone crazy.
Yeah, you got to have the VXX downside, which, by the way, VXX kind of resetting the gun a little bit the last couple of sessions, right? Back up over the 30 handle seems to be the demarcation a lot of people watch, right? Rob Losper, they watch when it gets above and below 30. That's where they line up. The OI always aggregates around the 30 handle. It's just a place people like to play. So when it gets north of the 30 handle again, it's like the gun is recocked, reloaded. All of the audience out there gets very excited. We know from your email that's the place you guys like to play. But yeah, we see what the Rock Lobster's doing. You got to have a little bit something else in your back pocket in case the upside doesn't exactly go your way, shall we say? In case we get a few more tweets. Look what happened back in January, right? Every one of them other was shy of the 30 handle in the old VXX before it became VXXB. And look what happened. That didn't really work out. And all that OI below the 30 strike went away. So you got to have something else in your back pocket for that rainy day, for that tweet day. And looks like we may have a few more of those perhaps on the horizon. So if you're just straight up short VXX, we know a lot of you are, consider having another leg somewhere, just in case the worst comes to pass. Speaking of legs, let's see what legs are lighting it up out here in the broad market today. As you might expect, things are trading. Coming into showtime, most of the major indices are rocking and rolling. The VIX, north of its ADV already, well over 500,000, 564,000 contracts on the tape. The ADV just shy of 500,000, so lighten it up today. SPY over 2 million on the tape, about 2.2 million, about 2.4 million is the ADV. SPX closing in on a million, about 850,000 contracts, a little bit north of a million, but 1.2 million is the ADV. The Q, 640,000 contracts on the tape. That's pretty much almost exactly in line with their ADV already. And the Russell, aka the IWM, a little bit north of 202,000. It's the laggard percentage-wise, with the ADV a little bit right around 300,000. In terms of individual equities, let's go from the bottom to the top of the top 10. Number 10, Tesla. $1.48 on the tape. Number 9, Amazon, $1.51. Number 8, Bank of America with 152,000 on the tape. Then number 7, Facebook, $1.86. Number 6, Baba, $1.87. Number 5, good old Disney, making some headlines of late, 203,000 contracts on the tape. Number 4, AMD, $2.07. Number 3, Roku, with 213,000. Some interesting developments out of their earnings. Number 2, good old Intel, my old stomping grounds, about 225,000 contracts on the tape. And number 1, still the fruit company. No specific news out of them, just lighting it up nonetheless. 520,000 contracts on the tape. Let's look here really quickly where the biases lie. Disney, 71% of that paper is coming on the call side. So the most heavily biased, pretty much by far. Almost everything else is pretty close to 50-50. Also, big news coming out of today is Uber lining up their IPO. The way it's pricing now, it's going to go public tomorrow. The way it's pricing, it seems like it's going to be towards the middle portion of that range as opposed to the higher portion. Again, kind of, it's funny how much of an IPO at the end of the day comes down to timing, and these are pretty crappy timing for Uber to go public, quite frankly. You got the market melting down with the trade war, and if that's not enough, your main rival just lit a dumpster fire of earnings, hemorrhaging $1 billion in a quarter. And before you get up in arms, I know a lot of that was stock compensation and things, but still, it's $1 billion in a quarter. No matter how you account for it at the end of the day, they burned through a lot of freaking money in just 3 months. So all of that is not exactly lighting the room on fire for Uber. And as a result, they're looking at the middle end of their range. The poor VCs and those who got in early still going to make many, many orders of magnitude of what they put in, so don't worry about them. But yeah, I think for a while there in the secondary and private markets, they were pricing this at around 112, 115, I think somewhere around 100, sometimes 100, you're talking like 120 billion market cap. Well, quote-unquote, not market cap, actually, but a quote-unquote valuation, whatever that means in those fake Silicon Valley VC terms. But when it hits the market, that's when the real valuations come in. It looks like that's going to be a lot less than the high 70s, low 80s in terms of billions. Still ridiculously high, but not a lot lower than what we were seeing in the secondary market. Let's see really quickly its old buddy Lyft here, see how they're doing. And coming into today, the big position, still the par calls in Lyft. It was at about 54.5. Coming into showtime, the par calls with about 11, almost 12,000 of those in June. The June par calls. So those look exceedingly distant at this point. And we have what we got, the October 62 halves. Talked about those a while ago. Those are still open as well, with about 11,000 of those. Those are the big two positions. And then also May, so there are some near-term paper. May 40 puts, about 10,000 of those open. So not all near-term or longer-term upside, some near-term downside in lift as well, which makes sense given the way this thing is trending well off its highs from the IPO. And in terms of earnings, we got a bunch popping off, including Disney last night, and we got some more popping off after the bell today. And we'll talk about those a little bit in Around the Block. In the meantime, let's keep on rolling into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's get weird, let's get wonderful, let's get whimsical. Let's get into the Odd Block. The first name in the Odd Block today is probably one most of you are not familiar with. You know, we like to go deep on the Odd Block. I like to go pink sheets, small, esoteric names. So little ones you probably haven't heard of. So today we're kicking it off with a small name. I think it's called AAPL. It's 2 A's and then a PL. I don't know, however you want to pronounce that. I believe it's French. Maybe that's Swiss. I'm not sure. I'll have to dig into the origins of that name. So AAPL. Let's break down. Actually, this is not a print from today. We're going to go back and highlight some interesting prints we talked about on the show not too long ago. This time we're going back to March 21st and what we highlighted on the show back then. And it was kind of fun on the show because we don't really talk a lot of Apple in terms of Odd Block. And we did that day. In particular, it's like someone drew the line in the sand in good old Apple. Yes, of course, I was joking earlier. Let's look at today. Today, the market, Apple is actually threatening that 200 level today. Let's see if they broke it. I don't think they broke it today. Yeah, 200.5 is about where we are right now. So off about 2 1/3 handles, a little over 1%. So that much ballyhoo 200 level looks like it's a bit under threat today. But what we talked about back on the 21st of March was someone, looks like at the time, drawing a fairly aggressive line in the sand at the time. You remember a few months ago, not that long from this trade we talked about here, we were talking about how everyone was wringing their hands about writing the 150 puts in July and how, oh my God, that would be terrible if Apple breaks 150. The worm has turned, the bloom is off the rose, look out below. And so a lot of you guys were and a lot of people on the show were hemming and hawing about whether you could even sell those. And now, so someone came in a few weeks later, sold the April on the 5th, so expiring on the 5th. So these are already expired. So we know how it worked out. The 182 half puts. And they did them for 61 cents, about 2,500 times. They were hitting the bid pretty aggressively for those. They wanted to get these bad boys done. And you know what? I don't think it takes a genius to do the analysis on these. Spoiler alert, they worked. Apple has looked pretty good in the subsequent 2.5 months since that level. Let's go back here and see really quickly where we closed on the 5th, just for fun. Oh yeah, 197 even. We closed on the 5th. So yeah, I don't even have to go digging to say that these puts probably worked out. What do you think, Mr. Rocklops? You like a good line in the sand put. Someone drew, at the time, somewhat aggressive line in the sand, 182 half. It was conceivable we could be below that by April 5th, certainly. And yet, in reality, it was just free money for this guy, sir.
I believe we were kind of buyers of that idea, I thought. I thought we didn't mind that at the time.
Yeah, it didn't seem bad. You're right.
That was not unlike, full disclosure, some little apple picking off the ground that I did in January or whatever. Very reasonable. But I think that's the way you use a put. If you use a put if you want to buy a stock, that way you don't, you can sleep at night. So you don't want to over leverage yourself. That is the danger. So I'm going to assume, although this is a big assumption, when somebody goes and whacks out a few thousand Apple puts, that they can afford to buy the stock, or they will take their money and go buy a Ferrari with it. What the heck?
You can probably buy a couple of Ferraris with that much Apple stock. That's a lot of shares of them there Apple there lining up there. So yeah, let's just say I don't even need to dig to the OI and look back to that date, roll it to that date. Let's just say that guy did pretty well, Mr. Rock Lobster. He did all right.
Not bad.
He tied up a few Ferraris and maybe a Lamborghini or two worth of capital for it looks like about a couple of weeks here, and it worked out. He covered his interest and then some. So there you go. Get a little bit of Apple love for all you Apple lovers and or haters here in the odd block. Let's keep on rolling. Another print we saw going up. Interesting day, March 21st. And another print we saw going up that day. More puts, this time in our old friend Barclays, a.k.a. BCS, a.k.a. those who put out such confusing tickers like VXXB, which we, of course, changed to VXX, and the market moved along with us. So point in the win column for us there. But Barclays, of course, ticker symbol BCS, trading today kind of unched off about a nickel, right around 820 or so. Not a huge moving day for Barclays. This is a name that a year ago was trading a whopping 1168. They peaked out pretty much a little bit north of that in May, right around 1182 or so. Then it was kind of all trending downward. They hit their nadir, you guessed it, Christmas Eve, like most other things, 7.25. Up about a buck since then. They threatened the 9 handle a couple of times in February and in late March. Never really managed to maintain it. Now we're back around 820. Still up a buck from where it was in January, but also still on the lower end of that 52-week range. So what did we see back in April? In particular, March 21st, which at the time, let's go pull up where the stock was. Then it closed on the 21st, 837. So these were fairly close to the money. We saw the April 8 puts. Looks like someone at the time was a little spooked on the fact that we were threatening the 8 handle. We had broken it, obviously, in January substantially, and then got back up. And then he's like, you know what, maybe we might be testing those lows again. I'm a little spooked. I probably own a fair bit of Barclays. Let me put on some of these puts I've heard so much about, and to the tune of about 2,527 of the April 8s. And he did it for 20 cents. These were opening over there on the Philly. Those are offered at 20. He took all he could get on the offer there. And looking back here, as we say, the stock right now is still north of that level, but obviously back on April expiration. Remember, it was a weird one that month because we had Good Friday, so the 19th was technically a day off. So it was actually the 18th, and the stock closed at 875 on the 18th. So spoiler alert, these puts went out pretty much worthless. The big print was that day on March 21st, and they traded about 900 or so more a week later on the 27th. Looks like this guy actually added to his OI. The OI went from about 3,100 to about 4,000. So he opened more, and then proceeded to kind of waste away. No other real sizable prints going up ever since. So this guy probably was maybe a little bit of a near-term underlying holder. If that's the case, though, you think he'd go a little bit longer term. So he could have been a specker. Either way, if I'm looking at the underlying version, though, because that works out a little bit better. In fact, he's happy he made up on the stock what he lost on the puts. If he was just outright specking, doesn't seem like it worked out too well for our friend here. So Mr. Rock Lobster, I should say, we are 1-1 here. What's your take here? You think our friend was doing it against stock, or was he just flying high here on some downside in Barclays?
You know, this is a tough one with BCS. This stock has never recovered from the financial crisis. I think it was just it was always on the edge. They always had a big CDS desk. This is a weird one. I think it felt like more protective put at the time, but it's just pretty. I think it's a strange purchase when overall banks have done really well, don't you? I mean, just there seems to be, at least for U.S. domestic banks, I guess they're not the ones that have to buy a bunch of negative interest rate paper from the ECB. So. Like European banks freak me out. I don't get it. I don't get the whole modern monetary thing and all that crap. So I have no interest in getting anywhere near those things. So I could see why you'd want to buy them, but I think it's just I think it's a put gone bad at this point.
Seems like it. The near term nature of it makes me think spec, but the size makes me think underlying. So I'm going to go that way and assume that this guy is not happy that he wasted, 20 cents, 2,500 times, but at the very least, his stock made up for it, so he's probably happier in the long run. If he's specking, then he's pretty much just straight up out. And we've cautioned you against such types of trades before, and this is an example of how sometimes they don't work out. Let's see if we can make it into the win column for our final name. More put action. It was a put day back on March 21st. So let's round out the third of the big put trades we saw back on March 21st. This time over there in the retail side in Nordstrom's. Ticker symbol JWN. Trading today off about a quarter, 39.68. What we profile, let's see where it was back on March 21st when we talked about it. March 21st, it closed at, there we are, 43.76. So substantially higher. And what we had were the APE 38 half puts going up, let's see, on the, for, what do we have? 31 cents. So kind of not quite mid-market towards the offer. They were 21 at 36, so fairly wide. I'm going to say that this is definitely opening, probably buying paper. I don't think he sold them to open at 31. If he did, he's got a pretty decent broker out there, or he's getting facilitated by a desk, one or the other. 4,652 times. There were earnings after this trade on the 16th, but these were April, so they didn't have that into account. And let's see here. That was pretty much the big print for these bad boys. They never really traded a ton again. And let's see, 38 half was the print, and we said here April expiration again. That was another weird one because it was not technically on the 19th, but the options were closed, so it was on the 18th. We saw it going out at 43.86, and these puts were still open, obviously going into expiration. So yet another one where it looks like it didn't really work out in the end. This one's a little bit more sizable. This one had all the hallmarks of someone looking like they wanted to hedge some underlying. Let's look really quickly at the 1-year chart here of Nordstrom. A year ago, they were trading about 49 and change, so about 10 handles north. They got all the way up to in the mid-60s, about 65 or so, actually 67 and change in November, and then 65 in September. So they had a few spikes to the upside, but never really could sustain it. And towards the beginning of this year, end of last year, they were back down in the 40s. Looks like this guy here was a little bit spooked. We could break the 38 half handle to the order of 4,652 times. And looks like more lost money, Mr. Rock Lobster. So we're 1 and 2 here on the March 21st odd block. What's your take, sir?
Well, I think Mr. Nordstrom, this is another one that I remember this one too as well. It's like we looked, this is another one we looked at, and it was, I think, wasn't there like a little minor jigginess? I think we were talking about this one because JWN was a potential takeout cash target. This is another, like, it's a good block of these puts that always leads you to believe that they're, they are protecting some stock, but at the same time, this was a potential buyout. I think that didn't happen. And maybe somebody's a little grumpy that it didn't happen. They want to hold the position. It looked like a strange purchase at the time, and it actually looks like kind of a strange purchase even now. It's like, okay, well, it's just hanging out there, nothing really happened. I don't know. It just it's a put purchase that kind of went nowhere. Maybe on the back of all that retail, there was some kind of retail issues, in Amazon. Every once in a while, everybody's like, retail is dead because Amazon's going to take over the world. So it's a strange one, but I didn't see the utility of it unless you kind of own some stock. It's another like a bridge too far type of put to purchase, and the stock's already way, way off its highs.
Yeah, that one definitely had a bit of a ways to go, and it didn't make it. So we like to look back at these names sometimes we profile on the show here, listeners, see how they worked out. Give you guys a little bit of insight into how people are trading and how their strategies are performing. And at least obviously on the options side, we can only analyze that. And looks like we're 1 for 2 here on the options side. As we keep on rolling, it's Thursday. It's time for you guys to take the reins with a little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block, the portion of the show where you guys take the reins, your questions, your comments. We also like to open up the floodgates to the Fidelity masses out there, see what questions they have on their brains with our Fidelity question of the week here. I know, Brian, you guys had, let's see, it seems like the Fidelity customers still have earnings and earnings moves in particular on the brain. I know, I think it was last show or even last week. I forget if it was Trey or Colin, which of you guys it was that brought up. We kind of discussed how to calculate the earnings move using the straddle last time. Do they still have earnings moves on the brain there, Brian, this week?
Oh yeah, lots of earnings calls these days, and it's still kind of the heart of the earnings season. So we're definitely hearing a lot of questions around earnings, but the straddle question still comes up, or how to figure out the expected move. So yep, absolutely.
Well, we hit it really quickly last week. If you want to give us a refresher, our listeners a refresher, go ahead, sir. Have at it.
Absolutely. So people will often ask, how do I know what the expected move is going to be, or what the expected move could be for this earnings coming up on whatever underlying they want to look at? And it's really quite simple. You just look at the cost of buying a call and a put at the money for the expiration closest to, but after the earnings date. So if you wanted to look at, say, earnings for tomorrow and what the expected move is, you'd want to buy options that expired after tomorrow at the money, and buying a call and buying a put, whatever those two prices added together that's the expected move from the options market.
Fidelity clients loving themselves some earnings. I understand. There's a lot of earnings popping off these days. So good stuff. If you want to check out more, of course, on the earnings analysis front, then head on over to the options side. New look. I know, brand new spanking look. I've been promising you guys a new website for a while. It's still there. I think you can kind of say it's in beta still. It looks really cool. We're making sure all the functionality is there behind the scenes. It's not all there yet, but it's getting there. So if you get into the website, you're like, whoa, what is this? We'll walk you through it. Don't worry. And if you have questions, let us know. We're making sure all the bells and whistles are still not there yet. It's gonna be more bells and whistles than we used to have, which is that's kind of the plan whenever you upgrade it, right? So we're making sure all those new features and functionality is gonna be working for you. But right now, new coat of paint at least, and it looks pretty darn snazzy, if I do say so myself. But we also like to ask you guys questions this time. This question is a good example of just how fickle the volatility space is, how fast moving the volatility space is. Because we thought, it's fun. Let's come in and give you a little bit. You guys like your little VIX polls. Let's do a little VIX poll today. Give you a few days to play on this one, maybe through the weekend. I don't think we're going to need that long, listeners, because we posted this a little bit before showtime. Trade war pop was back in effect around that time. VIX cash hovering around the 22 level. So I thought we'd ask you guys, hey, quite simply, you think this is going to last? Where is the VIX going to close next Friday? Not tomorrow, but next Friday. Gave you 4 choices, right around where it was in that 21 to 23 range. A little bit higher, so north of 23. Lower, so in the 19 to 21 range, or still lower, which is the shy of the lower than less than 19 range. We have pretty much an even tie right now between 19 and 21, which is exactly where it is right now. Still lower, which is shy of 19. And then a few of you coming in saying north of 23, about 17% still. So some of you out there still feeling the vol love. No one picking where it was, 21 to 23, because it kind of blew out of that range so fast. So a little fun snapshot in the world of volatility out there for us. Didn't really live long enough for the poll to get much teeth, but it's kind of fun. It's a good example of what the heck, how fast things can move out there in the vol space. And who knows? The day's not done, of course. We could see the VIX rally back. We could see it rally off. If I had a lean right now, it might be outside the range of that poll by the end of the day. We'll see if today's action continues and the trend continues here. KO asking us if we're buying the VIX pop here. I'm going to spoiler. I don't think so. Hopefully none of us did, because it wasn't that long. You know, this is funny. I've had this conversation. I was talking about this rock lobster with some of the guys on our advisor show. Chris Hausman, the former market maker who runs all the overlays over there for the Swan guys, and he was talking about just how short-lived so many vol pops are now. Like if you want to get in on them. You used to have, weeks, days to do it, probably a couple of days at least to capture whatever vol premium exists. These days, if you don't capture it within a couple of hours, it seems like it's gone. Is that kind of the feeling you're getting out there as well, Mr. Rock Lobster?
About how far that,
like how short-lived a lot of these vol pops really can be.
Oh yeah, I mean, it's like a lot of the vol newsletter I have with people is like, why is it so active? Why is it so, and I'm like, okay, number one, we put trades on we think have edge, and then when it moves and you make the money, you have to take it. It's not like, you're buying Apple 20 years ago. You just sit there and close your eyes. The vol's a reverting product. I think that's the most important thing is it's never meant to stay. It's, I think, almost impossible for it to stay super elevated forever. It doesn't happen. It could, right? But eventually the market goes to zero and the vol stops moving. So even if the market gets cut in half by 50%, the vol would be huge. After you get to a VIX of, 180% or something like that, or whatever crazy amount it would be, because we're moving, 400 handles a day or something. It can only go so high, and then after it gets that high, everybody's like, okay, well, the market can't go down much more because there's no market left, right? Which is what happened in 2008. It was already down 40%, and everybody's like, wow, this is starting to get cheap, and eventually buyers come in or whatever. So vol can only go up for so long over a period of time. So when you have the move, and it's what I stress with vol, you have to make your long vol trade. You have to be able to take profits if you get the move up. You can't get too tricky with it. And that's where part of the nuance of learning how to trade it. It's like buying puts in the index. You can buy them, but if you don't harvest the money and go do something with the dollars that you made on those puts, you might end up with nothing out of your hedge. So you have to be very clear in your mind what the goal of the product you buy is. And then Tucson talks about this in the strategy block all the time. He's not rolling stuff on and putting stuff off just because, he likes doing it on the show. He's taking money. The whole idea is with these trades, you take money, you make money, and then you go buy more stuff with it. And vol's the same way. So my thing is I want to reduce. So if I just have $4 in call spreads I'm closing, I still think vol can go up, right? Because you're in this backward situation. Who knows what's going to happen? But the thing with the vol products, which gets interesting, is the higher vol goes, you can the cheaper the call spreads get. So it trades almost anti-intuitive to what you would think it would be. So you get, the upside gets cheaper and cheaper. And then when you have those blowouts, you just take the money. So it is a nuanced way to trade. And it's because the nature of the product, how it moves is just much different. It just moves much different than, how Apple can move or Microsoft or anything else, or, even a commodity. It's like a commodity can't go up forever. It certainly can blast off and go up, but then it can stay there for 3 years, right? Or oil was at $100 for 4 or 5 years or something like that. So the nature of the product you trade, you have to be cognizant of that. Like oil trades differently than volatility, which trades differently than Apple. They have different SKUs. They have different characteristics. So if you're going to invest with them or understand how or trade them, you got to know how they work.
Indeed. Uncle Mike, you were invoked there, sir. So I will give you a period of rebuttal if you have, or just if you want to add any 2 cents to this short-lived nature of volatility spikes. Have at it, sir.
I think it is important, and I would agree that especially one of the things that I'm just noticing through the last 10 years or so is that news continues.
Oh, I guess the internet didn't like what he had to say. Uncle Mike, are you there, sir?
Can you hear me now?
Now I can hear you. There you go. You pulled a mid-sentence, Andrew, which is impressive.
Got it. So I think just with as we become more into faster information, it's going to be more knee-jerk reactions. And so I think that I would agree that vol spikes do tend to happen faster these days than they did just 10 years ago, for that matter. And I think that's just going to continue to be the trend just because information spreads even that much quicker.
All right, let's wrap it up here with a quick one here. You guys, Brian, you guys in the Fidelity hot seat keep getting your own questions. I'm gonna start feeling put off pretty soon. All this love here for you guys in the hot seat. I think we might have touched on this a while ago, but I think it's good to clarify it for our audience. This comes from Tella. I guess Tella, maybe Tela, T-E-L-A. Let's go Tella. They want to know, question for the Fidelity hot seat host. They want to know, does Fidelity offer zero commissions when closing out short option trades below 10 cents? Well, Brian, our audience loves the old short premium, and they like being able to close it out when it goes their way. So what do you want to tell our friend, our listener, Tella here? Can they do that, sir?
Absolutely. So we believe in them closing out that risk as well for those option contracts that are being closed out for less than 10 cents. There is no commission on those trades.
There you go. See, it's just risk for everybody. It's risk for you. It's risk for the broker. They want you to take the winners off the table, so they're going to incentivize you to do that. So there you go, Tella, and everyone else who asks similar types of questions about that. There you go. And here we go into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, let's go around the block. Macro continues to dominate the conversation, continues to wipe out equity, but there's also some micro stuff to focus on. While we're all glued to the Trump Twitter account, there was Disney, of course, after the bell last night. That was kind of an interesting one to watch. Today we have, after the bell, we have Sonos, we have Dropbox, GoPro, Yelp, Zillow, all of that after the bell. So if you like some new economy, Web 2.0-ish type names looking at, let's say, equity or real estate, restaurant reviews, all sorts of fun stuff, even wireless speakers. You got your pick today after the bell, and of course, some good Dropbox storage there as well. Tomorrow, got some hoteliers hitting the tape. We got Marriott hitting the tape there. We also have Viacom on the media, Tribune Media as well, and we've got good old JD.com, which is, of course, everyone's favorite name out there. And that's formerly called Jingdong. I call it called Jingdong now, formerly 360 Buy. It's one of these many Chinese e-commerce companies that are taking the world by storm these days. And of course, the big Uber IPO tomorrow, which not good timing for the folks at Uber out there. All right, let's keep on rolling. Let's go around the horn the other way. Let's start with Uncle Mike, sir. What are you watching for the rest of the week aside from the Trump Twitter account?
I don't think I'm watching anything, quite honestly. No, I'll be watching this. I'm curious to see what happens with Uber. Whenever we have a big IPO, it's just always some, at worst case scenario, entertainment. I'm not going to be a part of it, but nonetheless, I do enjoy watching things like that. But ultimately, we got to figure out what's going on with the trades. We're either going to get good news, bad news, or they're going to punt. One of those three things, like always. And I think it's going to be a little bit of good news and a little bit of punting. That's my thoughts. But who knows?
Brian, good news, punting. What are you looking for this week, sir?
Yeah, I'm in the same boat. Trade. That's all going to be about trade talk. One thing I'll be interested to see is if there isn't anything that comes out trade-wise, or if on the other side something really bad comes out trade-wise, I would be interested to see if Uber still does their IPO tomorrow. If it was a terrible, terrible market, I wonder if there's a possibility that they would potentially reconsider. But that'll be interesting to watch either way.
Yeah, I don't know how close to game time they can really make those decisions. I mean, if it's all kind of lined up, you got the price. I mean, if you delay it, do they have to reprice it then at that point? I don't know. So I don't know how much flexibility they have in that. But you're right. If the market's melting off down 3% across the board, I don't know if you want to jump into that with, hey, here's my new equity offering. I don't know how much flexibility they have on that. I guess we'll find out tomorrow. And last but not least, the lobster that likes to rock. Sir, what are you watching for the rest of the week?
Well, we could say trade, but everybody saw that. I am watching Intel. It is down almost 20% from the highs not long ago. Isn't that a bear market? Isn't that what the CNBC gets? A bear market. We are in a bear market. So that was I'm actually looking at the 46 level put. looks kind of interesting for $1 on the May 31 cycle. So that would be to sell to if you're interested in adding any more Intel to a portfolio. So I'm cogitating ways to do that. Could be a blog today as well. So I want to see if I like to do it. If I can have no risk doing it, then I really like that better. So I'm just messing around with that. So as far as all this goes, apparently if they get back to the table and start talking, does that mean, vol goes back to 15? And that's kind of, I don't see anything like that until maybe the end of next week. I certainly don't see that tomorrow, but we could, Xi and Trump could be playing golf at Mar-a-Lago tomorrow. So what the heck? Everything will be okay. Who knows? So that's, I think we will have kind of at least like zone 2, zone 3 volatility for at least a week. As much as I would like it to be lower to hit the jackpot, I don't think it's going to happen.
I like that image, them playing golf together. If you see that, then yeah, what's 2% rally? What's your over under on if you get that image coming out? They're happy, thumbs up, playing golf.
Yeah, I think that's it. That's an insto 50 to 80.
Yeah, that's got to be at least 2% if that's nothing. Oh, here we are. We love each other, playing golf. So there we go. Let's all hope for a nice golf shot to kick it off. Unless you're crazy bearish and you want some vol, then those two swinging golf clubs at each other, that would be another 5% sell off. All sorts of good stuff. I guess we all have to wait here and find out tomorrow. It'll be interesting. They got the Uber IPO. They kept this company in the secondary market for years, and then Lyft beats them to the punch, steals a march on them, blows the doors off to the downside in terms of badness, and then now, of course, on top of it, they're going to launch in the middle of this terrible IPO environment. So yeah, after all this time, maybe they're regretting their timing. We shall see tomorrow. But what else we can see? Let's go around the horn and see exactly what everyone else here is cooking up that may intrigue our audience. Let's start in the hot seat. Brian, if listeners are intrigued by what you guys over there at Fidelity are talking about, maybe they want to try these no commissions that close out for themselves. Where should they go? What should they do, sir?
They should go to Fidelity.com, and they can also go to Fidelity.com/options if they want to look at option-specific information, or /ATP if they get a better look at some of our tools and platforms.
There you go. Fidelity.com/options is the place to go. If you kick the tires, maybe you can call up, ask for Brian, ask for Trey, ask for The Last Emperor, ask for all these guys over there. Tell them you heard about them on the show. That'll bring, I think, a smile to their faces as they're fielding calls left and right from you guys on these crazy sell-off days. Bring a little smile to their face. Be nice. And let's keep going. Uncle Mike, if they want to call somebody else, maybe they want someone to actually roll their puts for them. They don't want to do all this stuff for themselves. Where should they go? What should they do, sir?
By all means, call me. You can find my information on my website at stcharleswealth.com. And if you're looking for an advisor who views markets like this as an opportunity, as opposed to someone who's going to say, well, let's just wait it out and see what might happen, give me a call. Would love to work with you.
So is that to imply you have Muppets calling you up? What was that voice? Is Grover?
I get a lot of them. You'd be surprised.
Is Grover calling you up, asking you to roll some puts for him? Hey, Uncle Mark, could you roll some puts for me? Snuffleupagus, maybe. I like that. Uncle Mike.
Miss Piggy.
Uncle Mike venturing into impression territory. I like that. See, 800 episodes. He's still full of surprises, sir. All right. And last but not least, Mr. Rock Lobster, you got any voices in store for us? And these are interesting times, to say the least, in the vol space. What do you got cooking in your vol newsletter and your vol events and everything else?
Well, if you listen to the show, just say, hey, I'm listening to the show, Andrew, and I want to try your vol newsletter for free for a month. I'll do it for once. If you got to mention Option Insider Radio. Send me a note, Andrew at optionpit.com. But if you don't mention it, no free newsletter for you. The second part is we have our Trader Summit in June, so we all get to eat steak on Mark Sebastian, that is. So that's a good time. June 4th through 7th, we have a little room for people that want to learn how to trade. And our Edge Hunter sheets, they are completed. We are actually having a webinar today at Option Pit. So if you want to actually see trades queued up by volatility edge, instead of just random guesswork, we have an actual product that does that. So I think it might be the first of its kind, if I do say so myself. So I helped invent them. with Mr. Sebastian. So we think they're a step above. So anyway, we will be doing that webinar today. If you didn't get to know it already, it is probably true.
There you go. Unless you're listening live, then you could hop on over there, perhaps, optionpit.com. Tell them you heard about it on the show today. And you too can get in there. Hopefully we'll see you in June. In a few weeks now. It's coming up. Not too long. Less than a month. We could see you guys in person. They should call it the Steak Summit with a little bit of volatility because that steak is extra delicious because it's on the meatball. And that, that's always going to be a delicious steak when it's courtesy of him. And on behalf of the Rock Lobster and Uncle Mike and Brian and the rest of the cohorts holding down the Fidelity hot seat, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing. If you haven't had enough equity volatility talk, well, then stay tuned. We're going to rejigger. We're going to get some guests in the studio here in a little bit. We're going to be back here in exactly 28 minutes for TWIFO, This Week in Futures Options. And guess what the features topic's going to be today? Guess what? Yep, equities. So we're going to get all into that. We got to get the vol with some new micro products launching over there in CME land. I think you guys are clearly trading them up already. You guys like your smaller size contracts. So those will be talking about those in the great deal. So stay tuned for that. Otherwise, we'll see you back here tomorrow for vol views and then next week for more of the option block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.